How to reduce your tax by simply harnessing the tax incentives in the new Nigerian Tax Act. Dear friends, do you know that you can really reduce your tax drastically, legally, and ethically simply by harnessing the numerous tax incentives in the new Nigerian Tax Act? Yes, you can. And this is exactly what Tax Corp is about to show you here. And here is the good news. Tax Corp has identified as many as 103. Yes, as many as 103 tax incentives in the new Nigerian Tax Act, and we will avail them here for you. Consequently, you do not need to be involved in tax evasion or tax misery. All you need to do is to comply with Tax Corp's tax planning prescription. If you require more on how the tax incentive will deeply help you to drastically reduce your tax, please do contact Tax Corp. But first, what are tax incentives exactly? Tax incentives comprise all the measures, exemptions, allowances, reliefs, suspensions, delays, reductions, waivers, official support, holidays, exchanges, and other arrangements put in place by the tax acts to enable taxable and non-taxable persons benefit hugely from the provisions of the tax acts, including upscaling their businesses, paying little or no tax, or paying a fair tax, and generally complying effectively and efficiently with the tax acts. It is incredible. We identified as many as 103 tax incentives in the new Nigerian Tax Act, which can hugely which you can hugely harness to pay no tax or pay little tax or pay a fair tax as a responsible individual or corporate citizen of Nigeria. Now, who can benefit? Virtually everybody can benefit from these tax incentives, including employees, self-employed persons, sole traders, partnerships, joint ventures, unincorporated persons, families, estate, trust, and settlement, limited liability companies, public limited liability companies, specialized companies, airline, and so on, non-taxable persons, government, and their MDs. Now, you want to reduce tax. To reduce your tax, you have to know how tax is computed. To compute tax, you have to know your chargeable income because it is on this chargeable income, which we call the bottom line, that you apply the approved tax rate to get your tax liability. Meaning that if you want to reduce your tax, you have to reduce your chargeable profit or income. Now, how do you arrive at chargeable profit or income? As the table shows you, the first thing is your gross turnover, less allowable expenses, and you arrive at profit or loss before tax. Then you less losses brought forward. Then you arrive at accessible profit after loss relief. Then you less capital allowances, and you now come down to total profit and or income. Then you less eligible expenses such as your contributions to National Housing Fund and so on. Then you now come to chargeable profit. It is this chargeable profit that you hammer the approved tax rate to get your tax. Meaning that if you want to reduce your tax, again, you have to reduce your chargeable profit. And how do you reduce your chargeable profit? You have seen how we got chargeable profit. So meaning that you can either decrease your gross turnover or increase your deductibles. And distinguished ladies and gentlemen, you can do this effectively by harnessing the various tax incentives in the Tax Act. And that is what we want to show you now. There are persons clearly who are exempt from tax. So who are these persons? Persons who earn no income, derive no income, and do no business in Nigeria, bring no income into Nigeria, are exempt from paying income tax and development levy. But please know that they are subject to other taxes such as VAT, withholding taxes. Small companies of annual gross turnover of 50 million or below with total fixed assets of 250 million or below pay no income tax. Small companies of annual gross turnover of 50 million or below, with total fixed assets of 250 million or below, pay no development levy. Small businesses of annual gross turnover of 100 million or below, with total fixed assets of less than 250 million, are exempt from charging, collecting, paying, or remitting VAT. They have nothing to do with VAT. Now, there are persons whose profit or gains are exempt from tax. These persons are a person engaged in educational, religious, charitable activities of a public character, churches, mosques, schools. Their gains or profit are exempt, so long as they are of public character. Cooperative societies registered under Cooperative Societies Act are exempt. Statutory or registered friendly societies are exempt. Trade unions are exempt. Federal government, local government, all that are exempt. Incomes that are exempt from tax include dividend distributed by authorized collective investment scheme, dividend or rental income received by a real estate investment company, real estate people. Your incomes are exempt. Compensating payments which qualify as chargeable dividends are exempt. Compensating payments which qualify as chargeable dividends or interest are exempt. Pension funds and assets created pursuant to the Pension Reform Act are exempt. Pension, gratuity, or any retirement benefits granted in accordance with Pension Reform Act exempt. Wound and disability pensions granted to members of the armed forces exempt. A sum received by way of death gratuities or as consolidated compensation for death or injuries exempt. Redundancy lump sum payment and other compensation of capital nature for loss of employment. Gains accruing from the disposal of assets by an angel investor, fantastic gains, venture capitalist, exempt. Income from bonds issued by state or federal government of Nigeria, exempt. Emoluments of any person serving as other rank, emoluments of any person serving in combat zone or hazardous areas, income generated by companies engaged in agricultural businesses, the profits of any Nigerian company in respect of goods or services exported from Nigeria, if the proceeds of such exports are repatriated through official channels. Dividend received from investment in wholly export-oriented businesses. Dividend, interest, rent, or royalty derived from outside Nigeria and brought into Nigeria through approved channels. Profits of a company engaged in sporting activities. Income of an employee who earns the national minimum wage or less. Wages and salaries of military officers. Chargeable gains arising from retirement schemes and gifts are exempt from tax. Gains accruing to pension funds or assets approved under the Pension Reform Act are exempt. Gains accruing to individual from disposal of investment held as part of National Provident Fund or other retirement benefit schemes are exempt. Gains on disposal of gifts for bravery are tax exempt. Chargeable gains on disposal of certain shares, those of you who are into stockbroking, who buy shares always, your transactions, some of them are exempt. To encourage investment by Nigerians in Nigerian companies, some gains from investment in shares in Nigerian companies are exempt from tax. Specifically, the Act provides that gains that are accrued to a person from disposal of shares in any Nigerian company are exempt from tax, where the disposal proceeds, what is in aggregate, are less than 150 million naira, and the chargeable gains does not exceed 10 million naira in any 12 consecutive months. Also, where the shares are transferred between an approved borrower and a lender in regulated securities. 3, where the proceeds from such disposal, notwithstanding the 150 million naira or 10 million naira threshold, are reinvested within the same year of assessment in the acquisition of shares in the same company or other Nigerian companies. Chargeable gains on certain compensations and life assurance policies are also exempt from tax. Any gain that arises from the compulsory acquisition of land of a person by an authority are tax exempt. Where government acquires your land forcefully or compulsorily, any gain you make from there are tax exempt. Again, any gain that arises from disposal of a life assurance policy by the assurer is tax exempt, except where the disposer wasn't the original owner. Similarly, sums not exceeding 50 million naira received by an individual as a compensation for loss of office or employment, wrong, injury, or libel slender are tax exempt. Chargeable gains on disposal of certain personal assets are also exempt. Gains arising from disposal of dwelling house. If you sell your house, any gain is not taxable. If you sell the land adjoining your dwelling house, any gain is not taxable. Gains arising from disposal of personal chattels, being tangible, movable property, which total consideration is not more than 5 million or 3 times the annual national minimum wage, whichever is higher, are exempt. Gains arising from disposal of one or two private vehicles. If you sell your car, your private vehicle, any gain on it is not taxable. Gains arising from disposal of an asset as a gift, which itself was acquired as a gift. Now, the golden rule for deductibility of an expense, very important. Please watch this. Dear friends, tax is not imposed on gross turnover, no. Rather, it is imposed on the balance of gross turnover less all deductibles. A major component of these deductibles are expenses, and they are only deductible when they pass the golden rule for deductibility of an expense. So, what's the golden rule for deductibility of an expense? It is that in ascertaining the profits or loss of a trade, business, profession, or vocation, all expenses, watch this, which were wholly and exclusively incurred in that period in the production of the income shall be allowed as deductions in arriving at the profit or loss. Please remember what to say there. The expenses must be wholly and exclusively incurred for the production of that income. Where they fail the golden rule, they will not be allowed. This is also called the deductibility criteria. The more you understand and apply this deductibility criteria or the rule, the less tax you pay. Very important. And if you have issues on the deductibility of any expense or deduction or any tax matter with any tax authority, and you cannot pay a tax consultant, and you cannot pay a lawyer to deal with the issue, you can take the matter to the newly created office of the tax ombudsman to deal with for you. And this is for free. This is another great tax incentive. Additional deduction of 50% for salary increase and employment of staff. Ladies and gentlemen, if you employ more staff now in your company, you will get additional 50% deduction of their salaries. Approved bodies for allowable deductions. As a responsible corporate citizen, your company can make the donations to the underlisted funds, bodies, and institutions. But please note that the Act permits only companies to make allowable deductions. So, meaning as an individual, you cannot make donations, even to the approved bodies. Only companies can make allowable donations. The approved funds, bodies, and institutions to which a company can make allowable donations are public funds, statutory bodies or institutions, religious, charitable, educational, scientific institutions, bodies regulated under the Diplomatic Immunities Act, any pandemic, natural disaster like COVID, may COVID not come again, loss relief and capital allowances. You can now carry forward unrecouped losses to eternity. No more limit. You can now take risk. And if you make loss in the process of your risk, ladies and gentlemen, the government said you can now deduct it from your next profit. Similarly, you can now carry forward unrecouped capital allowances to eternity. No more limit. Meaning that you can acquire more assets now for your business and you can recoup the capital allowances. Also, you can now absorb all your calculated capital allowances in 1 year of assessment if you have sufficient profit. No more restriction, no more 75% or 62. No, it is 100%. And lastly here, capital allowance system now aligns with accounting depreciation system, as you now have only one rate per annum, no more initial allowance, so everything aligns. Eligible deductions for individuals only. The following deductions are allowed as eligible deductions in the calculation of the chargeable income of an individual, not for companies. Contributions under the National Housing Fund, contributions under the National Health Insurance Scheme, contributions under the Pension Reform Act, interest on loans for developing your own house, life assurance premium on your life or your wife or your husband, rent relief of 20% of annual rent paid, subject to a maximum of 500,000 naira per year. Release for double taxation, withholding tax and excess input VAT. Gentlemen, where the income or profit of a resident in Nigeria derived from outside Nigeria has suffered tax in the source country, the tax paid outside Nigeria shall be allowed as a credit against the tax payable in Nigeria. You pay in London, the same income is taxed in Nigeria, the London tax will be given to you as a credit, so you pay less. A tax deducted as source, except where stipulated as final tax, is regarded as advance tax paid by the person from whom it was deducted and for which the payer could use to set off against any income tax. Withholding tax is not a final tax, it's an advance tax. Tax paid by a person to whom a taxable supply was made is known as input VAT, and for which the payer will use to set off against any output VAT. But where input VAT exceeds output VAT, a taxable person shall be entitled to refund of the excess VAT. Similarly, a person whose suppliers are chargeable to VAT at 0% shall be entitled to refund of the input VAT on taxable supplies they consumed. Investment instruments exempted from stamp duties. The following instruments, among others, are exempt from stamp duties. All documents relating to the transfer of shares and stock, so you can buy more shares and do transfer, no stamp duties. Electronic transfer of electronic receipts of money of a sum below 10,000, no stamp duties. Electronic transfers of salary payment, no stamp duties. Intra-bank self transfers, if you transfer money within your account, within a branch, between branches of the same bank, you don't pay stamp duty. If you buy ship, vessel, and all that, no stamp duty. Corporate society, no stamp duty. Supplies exempted from value added tax. But first, gentlemen and ladies, let me make some clarification here. VAT exempt means that the supplies are not within the tax system. No charge, no collection, no payment, no remittance, and no claims. But zero-rated VAT means that the supplies are within the VAT system, but you cannot charge, collect, or remit VAT. But you can pay input VAT. And when that happens, you can claim refund. The following supplies, among others, are exempt from VAT. Oil and gas exports, crude oil, goods purchased for humanitarian, baby products, you can now give more beds to more babies. Locally manufactured sanitary towels, military highway, share passenger road transport service. You can now use your car and carry more passengers. Purchase, hire, rental, lease of agricultural equipment, no VAT. Supplies are consumed by an approved entity in export promoting zone or export processing zone or export or free trade zones. Goods or services supplied to diplomatic missions. Plays and performances conducted by educational institutions as part of their learning. Land or building, including interest in them. So meaning for you people in the estate, land and building are not vatable. Money or securities, including interest in money and so on, government licenses, wheelchair assistive products, not vatable. Now, like we said before, there's a difference between VAT exempt and zero rated VAT. Here we have zero rated VAT. The following taxable supplies, among others, are charged to VAT at 0%. basic food items. So you can have more babies now, more children. All medical and pharmaceutical products, all medical herbal products, educational books and materials, so you can go to school more. Fertilizers, locally produced agricultural chemicals, so you can do more you can go into farming and do more. Veterinary medicine, locally produced animal feeds, live cattle, nama, goats, sheep, and poultry are not vatable. Agricultural seeds and seedlings. Electricity generated by GENCOs and supplied to embed or to the national grid are not vatable. Electricity transmitted by TCN to discos, not vatable. Medical services, repeat, medical services are not vatable. School fees at all levels, not vatable. Exported goods, excluding oil and gas, not vatable. Exported services, exported incorporated property. Medical equipment, electric vehicles, their parts, knockdown parts are not vatable. Items on which VAT is suspended or delayed. The following items are suspended or delayed for now until the minister decides otherwise. Petroleum products, renewable energy equipment, compressed natural gas (CNG), liquefied petroleum gas (LPG), other gaseous hydrocarbons. All these are not vatable until the Minister of Finance decides otherwise. Now, distinguished ladies and gentlemen, harnessing the 103 incentives to reduce your tax. You have seen that the new Nigerian Tax Act taught so much about you, how you can bear less tax burden, grow in your employment or in your business. And for this, they provided so many tax incentives which you can harness to pay little or no tax, just a fair tax as a good citizen. Obviously, you do not need to dodge or evade tax. Just apply the tax incentives and you will feel good. And the good news is this: Tax Corp has comprehensively and meticulously dissected and calculated, explained, and illustrated the entire Tax Act into 20 interdependent compasses called NTC, the Nigerian Tax Compass. See the list in the next slide below. The uniqueness is that each compass brings together all that you need to know about each tax subject into one compass. So, all that you need to do is to be very clear about what you want and select from the NTC menu, and you are good. Should you have any issue, please do contact TaskUp via any of our contact channels shown at the last slide, as we would like to hear from you. Here are the list of the 20 interdependent compasses. You can choose from any of them. You have VAT, withholding tax, taxation of company, taxation of individuals. You have capital allowances, offenses, and penalties. There are compasses dedicated to each of these matters. About Tax Corp and the principal consultant. Tax Corp is a Nigerian tax consulting firm which specializes in tax matters. Prince Chidi, FCA, FCTIA, MBA, is the principal consultant. Prince Chidi is a licensed fellow of the Institute of Chartered Accountants of Nigeria and the Chartered Institute of Taxation. Tax Corp and Prince Chidi have provided tax services to numerous individuals and corporate bodies in both the public and private sectors, locally and internationally, since 1990, over 3 decades. The beneficiaries include the Federal Revenue Service, which by in the next few days will become Nigerian Revenue Service, Revenue Mobilization Allocation and Fiscal Commission, RAMFAC, State Internal Revenue Services, Federal Capital Territory Internal Revenue Services, FCTIRS, and many private companies and individuals, which we can mention here. For details on the Nigerian Tax Acts, Nigerian Tax Compass, and how Tax Corp can help you, please, our details are here. Our contact details are here. You can always reach us through any of these um, channels. Thank you so much, and we will continue to provide more information so that we can educate you better and you will feel good in 2026 and thereafter. Thank you.